Mr. Eddy is president of the International Organization of Standardization, but most importantly, he's our chairman. And we insisted that he should come. We also have apologies from Mr. Peter Mwangi, but represented here by I'm having a blank moment, by Peter Anderson. I told you it's not a good idea to have an introvert on stage. And then we have a really, really special guest. In September of 2013, the board and the management of the exchange hosted the Parliamentary Committee of Finance and Planning. And part of that discussion was to discuss the Capital Markets Act, the regulations, to enable, the facilitation to enable the exchange go ahead with this project. And the gentleman who chaired that session is Honorable Nelson Gashuie, and he's been kind enough to honor us with his presence today, and we are really happy to have him here. So Honorable Nelson really opened the doors for us to start this project. I'd like to invite Jeff. Jeff is the CEO of the exchange to open with his remarks. And as I'd mentioned, we have a thing for 3 pieces.
I was actually contemplating where to wear this because I knew Terry would do it. Our chief guest, the Chief Administrative Secretary, National Treasury and Planning, Nelson Gashuie, who is also a very close friend to the exchange and is really helped us through this journey. Our chairman, Mr. Sam Kimani, Vice Chairman Bob Karina, and board members of the NSC represented here. I think I'd like to just call them out because I think it's an important day for us. I'd like to introduce Mr. Kiprono Kitoni, who is our director, Mr. Osea Kili, our director, Rispa Mkoto, Rispa is our director as well, Paul Mwai. Right, and we're still expecting the rest, so we are very happy that this is happening today. I think the protocols have been recognized. I just want to say that we also had the Deputy Governor of the Central Bank who was here, and she had to leave because of some urgent matters. I'm very happy also to say that this is not an exchange for Kenya, it's an exchange for the region. And today we are delighted to have my fellow CEOs from the region with Mr. Paul Buiso. Maybe he can stand again. Thank you, Paul, for coming to be part of us. And also Mr. Celestine Raokomba. I think he's on the way if he hasn't arrived. As Terry said, this is the second exchange in Africa, the second derivatives exchange in Africa. And hence, that's why we have quite an audience from the international arena. We also have our neighbor, and I always want to recognize Mr. Jap from Nedbank. Jap, maybe you can stand as well. I always have to take care of Jap because he gives away his parking on a day like this. I think today is a great day for us, and I'm very happy to be having my former chairman, Mr. Eddy Njoroge, who has also brought us 2 guests, Mr. Swartz and Mr. Tuckinson, and welcome to Kenya and welcome to the NSC. And also my current chairman, Mr. Sam Kimani. When this journey began in 2011, it was actually, the way you start a project and you're like, well, it can be done in 6 months. We never scoped what we'd be going through. And so there was that passion, excitement. I happen to have worked with Terry in another life, and I know he gets very impatient. And so there was that urgency, and we thought that would happen in 2011. When I came to the board in 2012, again, we felt that we would actualize it. 3 years later, it wasn't ready. 2015, when I joined as a CEO, Terry made me make a public announcement that we're launching this market in 3 months. I did. And I've been shot dead ever since. But today I can actually say proudly that we're launching the market. And I think BD and the rest of the papers, please, thank you very much. So it's been a very, I would say, exciting experience. I think for those who have been part of this experience, I don't think you can actually you can learn this in a textbook. We've gone through various motions, working with various stakeholders, being handheld by very experts in this market. We onboarded experts from our markets in Johannesburg, London, and India. So we took a very diverse array of investors. We also brought on board a very dedicated technology partner, and this is STT, represented by Michelle and Zach, and maybe they could just stand and wave. I know they'll be coming here to say a word or two. STT is a platform provider for exchanges. They currently offer us for our bond trading platform and also for markets in Uganda and Tanzania on the equity side as well. So they've been a very, very worthy partner. So coming today is great. This is actually a bell ringing for opening the markets. So we're really going to try and run time. And for us, as we open the market today, we're also launching our derivatives exchange. It is historic. After 65 years of being in the market, we've actually been able to make great strides, and we're going to be the second exchange in Africa to launch the derivatives market. So ladies and gentlemen, innovation for NSE is very, very central in everything we do. And as capital market players, we've basically been able to embrace this with real tangible outputs. The CMA has actually put innovation as part of the key deliverable in strategy. We have also resonated with that. And so this continues to be our core mandate. So with this comes the need for us to diversify our offering. For the last 65 years, we've basically been offering bonds and equities as our key markets. But since 2015, when we had a transformative change at the exchange, when we demutualized, we've been at the journey of offering new products just to broaden our offering. So today the exchange trades on exchange-traded funds. We also trade on real estate investment trusts. We are working on other new products like GDRs, GDNs, and asset-backed securities. Those will be coming on board. The regulation exists. And we've also brought in a unique product, I think the first retail bond in the world, called Akiba. I think for those who have not tested Akiba, I don't know what we are doing, because this instrument is giving you a 10% net return for as little as 3,000 shillings. So that's been a very great product for us, and this is all part of the innovations that we are doing. Today the NSE is a very international market, so we have a lot of international investors who trade on our platform. We are members of the Morgan Stanley Composite Index for frontier markets, and even last year were the best performing in that particular index. And so we also offer platforms. And so derivatives is also an opportunity for us to really give a unique class of investors who trade on futures to come to the market. They're currently very active on our spot market. Close to 75% of our market today is foreign traded. And we feel that the opportunity for them to also trade on contracts is something that they're keen to do. And so we can't overstate that this is not just a development for Kenya, but a development for Africa. So the NSE is the Secretariat of the Africa Securities Exchange. And we actually engage a lot with our African partners. We're currently working on an international program called the Africa Exchange Linkage Program. And this is going to create a lot of cross-border trading. So derivatives is going to be one of the platforms that we offer. And that's why we have our friends from FMDQ here. And we are very happy that you're able to make it, because this is the same messaging. We share knowledge. And FMDQ is also working towards the derivatives market in Nigeria, and so we'll be able to also give our experience of how we've gone through this. So we've established this market through various frameworks, critical to ensure that it remains very protected. So we've set up a settlement guarantee fund, an investor protection fund, and these are continuously being funded by various funds from various channels. Education is going to be critical. I think in 2015, our chairman then, Eddie, took us for a tour to Brazil for an CCP AMA conference. And the one thing they told us, three things, is that we must educate, educate, educate. And so we'll continuously educate and really bring out more knowledge on these products. Terry will carry out a small session for the few here, just for you to understand, just on the basic level of where it has been. Now, this is part of the key deliverable for our 2015-2019 strategy. And as we now develop our 2020-2024 strategy, it'll be about consolidation and promotion of our products. I'm delighted that we've had very good stewardship from Mr. Sam Kimani through this journey, and very delighted that he's going to take us through the beginning of the next strategy. And now it's about how do we get these products uptake to increase. We'll do this both locally in Kenya, regionally, and in Africa. And I'm delighted to say that Paul Buiso has even committed that we'll work together to help the derivatives market and all our products get interest in their own markets. And we'll definitely work on how we can take care of each other within the particular framework. I must say, I could stand here, speak all day, and then we'll get late for the bell ringing, because it's been a great journey, and it's been something that today we are really, really delighted. But I really want to thank the board, led by our chairman, Sam Kimani, for giving us that leadership and making this part of the key deliverable. I've always been scored down on derivatives because we've not been able to achieve this. But today I can proudly say this KPI is being witnessed by many. So, I think the weighting is higher than what we agreed. So, so subject to this happening, we'll be delighted to do that. I'd like to thank the CMA, Paul and your chairman and the board. CMA have been a really worthy partner. I think we've established a very cordial relationship when it comes to development of products and how we protect the market. And today, what you're seeing today is not the NSC's efforts, but the NSC and the CMA towards delivering this product and many other products, including the new ones that we are bringing on board. The Central Bank, in absentia of Sheila, CBK were very helpful to take us through this and just making sure that we've been able to get those approvals. Our clearing members, Q1 Cooperative Bank, I can see Lydia Rono and Sylvans Nono from Coop Bank, and also Charles from Stanbic and Gwen, who have been key partners in this journey. I think the National Treasury, naturally, Nelson and your team and parliamentarians for making this happen. I think legal frameworks and regulations is really the base of everything. So we're happy that you've been able to take us through this. I remember the former chairman, Benjamin Lagat, keeps meeting me and asking me, I thought we approved something. How come it's not coming? Today I don't know why he's not here, but this is really delightful to have. So the NSC will remain focused on delivering new products. We are resonating a lot with the Vision 2030. All these products we're bringing is supposed to support also the Big Four agenda and really put our position in terms of leadership in this region to deliver on what's expected. So once again, thank you everybody, thank you stakeholders, thank you partners, trading members, everybody. And mine is just to say that let's make this market happen. We've already started trading, and really, really wish you all a very successful journey through the derivatives market. Thank you very much. I'd like to invite, is it now the co-host? Where is she? Bansri? Oh, sorry. Bansri.
Good morning, everyone. Sorry, I normally say this stage is normally made for Jeff, because I always have to pull this down to fit me. Thank you very much, Jeff. I would now like to call upon Michel Dubert from STT to give us a few remarks. Thank you.
Hi. Good morning, everyone. Jambo. I see lots of old friends in the audience today. Many old faces. It's been a long journey. As Jeff said, since 2011 we started this journey, and a lot has happened. A lot of regulation needed to be written, a lot of explanation, a lot of education, but we are here. We are finally here. So just a little bit about STT. We started in 1985. We provided systems to the bond traders in South Africa. Later, we were requested to create a trading system, and the client was SAFEX, the South African Futures Exchange. That was the start of our ITS, which currently runs in South Africa today. Since then, we have grown into an international brand, and we were installed in 13 different countries. very proudly from humble beginnings, humble beginnings, we are now international. My congratulations goes to the board of the NSE, the CMA, Terry and your crew. Well done. Congratulations. Asante.
Thank you very much, Michelle. We really appreciate the role that STT has played in making today a reality for the exchange. I would now like to call upon the gentleman that has led the derivatives team at the exchange to take us through a brief presentation, Mr. Terry Edembesa.
Hi. We just figured some of you might have come to launch a derivatives market and you don't know what derivatives are. So I might need to do a 101 for yourselves. It's not working. So a derivative is really a contract that derives its being from another asset, right? Yogurt is a derivative of milk, right? Simply put, right? So it derives, for the older folks who went through the Cambridge school system, I think you did calculus much better. So the deriving class was much better handled than the 844 folks here. So a derivative derives its being from another asset. The asset could be equity, could be a bond, interest rates, could be commodities, could be anything. And there are different types of derivatives. You have futures contracts, you have forward contracts, you have swaps. The transactions that the banks do here are forwards, and I'll explain slightly the difference between the two. So for futures contracts, they are standardized contracts. They are, because they're standardized, then you have the specifications are clear. The underlying is clear. There's the price and the dates for settlement are agreed upfront, and it's really a contract. So some people have asked us, so what is coming to my CDS account? Yeah, what am I receiving when I trade a derivative? So you won't get that. It's really a contract. It's an automated system. So it's a bit of paper transactions that you'll be doing. There's a daily valuation and settlement of the contract, and I'll explain shortly what this actually does. There's two key distinguishing factors between the spot market and the derivatives market. In the spot market, when you're buying a security, you have to pay the amount of cash for the security upfront, the full amount. So if you're going to buy 1,000 shares worth of Safaricom, you'll have to pay 25,000 shillings, right? But if you're going to buy a contract on the derivative, you'll pay only a fraction of that amount, what we call initial margin. It's a good faith deposit, and the exchange holds that good faith deposit for the duration of that contract. So there's a key difference between the spot market and the derivatives market. For derivatives, you're trading on margin. On the spot market, you only actualize your P&L, your profit and loss, when you exit the position. So if you buy a share today, the day you sell is when you will realize your P&L, okay? But for the derivatives market, because there's a daily valuation on the contract, because the contracts trade on a daily basis, you actually, there's a daily valuation, and you actualize your profit and loss on a daily basis. So if the price moves to 26 and you are long, which means you had bought the contract, you'd make a shilling times the number of contracts that you've bought, right? So, and we've set up the system in such a way that the end of day processes happen, and you are able to then get your client statement, and it's able to tell you what profit you are holding or what loss you need to pay up. And this happens on a daily basis. So this is how we've deployed the infrastructure. We have the clearinghouse, which is the exchange, and the exchange clearing entity called the NSE Clear, which is 100% subsidiary of the NSE. We have delegated some clearing functions to clearing banks, and Cooperative Bank and Stanbic are the first banks to go live with us today. One of the things we'd like to brag about is that when South Africa started the market, they only started with one clearing bank. And I think, Michelle, it was like for a period of 10 years or something, or more. We've managed to start with 2 banks, and that's a big win for the Kenyan market. And then we have trading members. We are going live with about 7 members, and 4 more to be onboarded in the next 1 week. And that's a big win for us as well. And then you have the clients. So your clients would open accounts with the trading members. The trading members have to open accounts with their clearing banks, and the clearing banks have to sign up with the exchange. And then right on top of the exchange, we have the Settlement Guarantee Fund and the Investor Protection Fund. And this really are the system, this is the system infrastructure that we've put in place, because the entire process is automated. I think the only paper interaction with paper as an investor you'll get is your risk statement when you go to your broker, and also your KYC and AML disclosure. So someone was asking me if I have 100,000, if I have 100K, just walk me through a transaction, right? Which is a typical Miro way of asking questions if they want to learn. So I just mentioned, if you're going to buy a contract in the derivatives market, you don't say I want to buy, you say I want to go long. Sawa. Lydia, you say I want to go long. And if you have a negative view on a security, you say I want to short, not to sell. So at least if you get out of here with those 2 terms, you can tell guys in the office, I know how to go long and short. So assuming you have 100K and you want to go long, so what would you do? You'd walk to your broker. He'll of course open an account for you. You'll deposit the 100,000 with your broker, okay? And you'll tell the broker I want to buy the Safaricom contract, the March 2019, for example's sake, Safaricom contract. Hey, what's happening to the screen? And then we've structured the contracts in such a way that one contract size is worth 1,000. So you'll tell your broker, I want to buy 10 contracts of Safaricom, okay? And the broker will then tell you, okay, for you to buy 10 contracts of Safaricom, which the notional value is 250,000, you'll only pay a margin of 25,000. Are we together? If you are to buy 250,000 worth of Safaricom, you literally have to pay 250,000. But now you have 100,000. Are we together? Dr. Fresh, I might have to come for teaching classes. So for 100,000 and you want to buy 10 contracts, you'll pay an initial margin, that good faith deposit, of 25,000, and that will give you an exposure of 250,000. But the broker will also ask you for an additional margin of 2,500. So the total outlay of your cash will be 27,500. So they'll then put in an order on the first day, and assuming you're going long on the contract, you'll get about 10 contracts, so you'll pay 25,000, and the price is 26 at the end of that day, you'll have made a shilling of one contract. So the actual value you'll make, actual cash, would be the difference between the end of day price that day and the purchase price, which is 1 times the number of contracts, 10, times the contract size, which is 1,000, and you'll actually make 10,000 shillings on that day. Okay? And this is because you went long on the contract and the price went up. Okay? Then assuming the following day the price keeps going up, you keep making money as the contract goes up. But if on, say, the third day the price takes a turn, you then lose the difference. Okay? And your cash flows are then calculated on a daily basis that way. So assuming by the end of the 5th day the price has gone back to 26, you'll actually have made 9,150. Of course, we've removed fees. You'll have made 9,150, and then you'll get your initial margin, your additional margin back. Your cash flow at the end of that transaction will be 109,150. Okay? But then, of course, on this transaction, there's somebody else on the other side, right? So the person on the other side, just flip this for me. Because the other person is on the opposite side of a transaction, they would have lost money. Okay? So their cash flow at the end of the period would be a negative 10,850 because they were short on that contract. Are we together? It doesn't mean that every time you're long on a contract, you'll make money. Okay? And it doesn't mean that every time you're short on the contract, you'll make money. You make money if you're long on a contract and the prices of that contract go up. And you lose money when you're short on the contract and the contract price goes down. So there are a lot of benefits why investors would want to do this. Of course, you want to hedge your portfolio based on the price movements, especially on a spot portfolio. There are a number of strategies you can use. Because of the ability to only pay up a small margin, you can leverage on your returns. And then transaction costs are really low. If you were to do a transaction of the same on the spot market, you'd probably pay close to, between 1 and 2% on that transaction. But on the derivatives market, you'll pay, if you're buying the single stock future, you'll pay about 1.7%. If you're buying the index, you'll pay about 1.4%. And there's less counterparty risk. Remember, I showed you the structure. NSE sits at the top as a novating agent. You don't need to know who your counterparty is because you're facing the exchange. And you don't need to worry that your transaction or your P&L will not be paid because the exchange then stands good for all those transactions. That's 101. We'll have to do another session with Dr. Fresher for 102. Sawa sawa. Thank you very much.
My name is Alistair Gould. I'm CEO at African Alliance Kenya Investment Bank, part of a larger group headquartered out of South Africa and one of the leading brokerage firms in Kenya. The NSE is launching Next, which is a derivatives market. It's going to be the first in East Africa and only the second across the whole of Africa. The NSE is launching Next initially with future contracts and eventually additional derivatives will follow. The NSE's Next is going to start off by trading on two types of futures. These are single stock futures and an index future. The single stock futures are going to come from 7 stocks that account for 70% of market capitalization, and the index future is going to come off the NSE 25 index, which comprises of 25 of the most liquid stocks trading on the NSE as of now. Investors benefit from trading futures on Next in 2 primary ways. First is hedging or risk management. Second is in enhancing return. So in terms of risk management, holding a future or trading a future allows you to position yourself properly in times of volatility. You hold a stock and you think that it's going to go down, but you don't want to sell your stock. You can sell a future instead so that you then make some money on the way down and retain the asset. As far as enhancing return goes, being a margin product, your initial outlay is a lot smaller compared to the size of the contract that you'll eventually buy, and this allows you to then maximize your return. One other way that investors can benefit from trading futures is with an index future, you gain exposure into a wider range of assets without having to buy those individual stocks. So through NSE's 25 share index, you're going to have exposure into 25 stocks all in one go through one contract. So NSE Next will ensure that all trades are honored. Actually, at the top level, NSE has an entity called NSE Clear, which will match all sides and is the central counterparty to all transactions on Next. Secondly, all transactions on Next are pre-funded, so nobody will transact futures contracts without having provided an initial margin. Lastly, all contracts on Next are settled on a daily basis. So given that there are price fluctuations every day, anyone who has made a gain will have that gain credited into their account. Anyone who's made a loss will have that loss collected from their margin. And that way the market will balance every single day. For anyone interested in trading futures on Next, first step is to open an account with an approved trading member for Next. The names of those members are available on the Nairobi Securities Exchange website. Thereafter, any trader will need to fill out a risk disclosure form because there are risks associated with trading any margined product such as futures, and this is just to ensure that they are aware of what they're getting into and they understand the product. It's extremely important for anyone trading futures to fully understand and appreciate what futures are, and that's the role of trading members to ensure that there's proper understanding.
Thank you very much, Terry. So by a show of hands, how many people understand derivatives a little bit better today as we leave? By a show of hands. Okay. So Terry is actually doing a good job. Wow. Okay, and by a show of hands, how many people are going to trade before the end of this week? Terry, not so well, not so well. Great, great. I could see a lot of people concentrating and calculating back on their phones if they did actually put their money on the derivatives market, but maybe they were also doubting Terry's math, which we also do sometimes here. All right, thank you so much, Terry, again, and I would now like to invite Jeff on stage to invite our chairman. Thank you.
Thank you very much, Bansri. And I believe we are all opening our checkbooks and we'll be signing up today. I think for me, it's a great honor today to really be here to welcome our chairman. I just recognize a few new guests. Lawrence Kiambi from KCB, thank you for making it. Lawrence is the finance director at Kenya Commercial Bank. Habil Olaka from the Kenya Bankers Association, and Stan Kianda from the Fund Managers Association, and the fund managers represented here. Thank you for your partnership and continued support. So thank you very much. And now is to invite Sam Kimani. Sam is our chairman. He's been our chairman for the last 3 years. Very instrumental and passionate about this product. And thank you, Sam, and your board for hand-holding us and believing in us. Thank you very much. Welcome, Sam.
Thank you, Jeff. As if you have if you have noticed, I don't have a three-piece, but you can see Terry and Jeff had one. At the NSC, we believe image is everything. You know, otherwise you wouldn't trust people with your money who are not well dressed. So the other thing I noticed is Terry talked about long and short. Jeff is long. Terry, I will not say. But on the same, I think my vice chair is long, and I am, pun intended. Chief Secretary for the National Treasury and Planning, Honorable Nelson Gaishu here, Chairman of the Capital Markets Authority, Mr. James Dewa, the Chief Executive Officer of the CMA, Paul Mudhaura, Board of Directors of the NSC, CMA and CASIP, the NSC Chief Executive Jeffrey Odundo, Charles Ogalo, CDSC Chair, Rose Mambo, the CDSC CEO, honorable guests, ladies and gentlemen, good morning. Let me start by welcoming you to the Nairobi Securities Exchange opening bell ringing ceremony. This is a customary ceremony that was inaugurated at the NYC, that is the New York Stock Exchange in the 1870s. The opening bell is not only a sign to open or close the trading of the day, nor a symbolic gesture. It also gives a podium to companies to showcase key milestones achieved to make announcement about new innovations. The history of the NSC dates back to the 1920s, when we used to meet at the Stanley and trading took place on a gentleman's agreement with no physical floor. Since then, the exchange introduced an online trading platform. In 2015, it demutualized and subsequently listed on the exchange. Presently, the NSC has 64 listed companies. We have 2.17 trillion of market capitalization, and the outstanding bonds today are 1.43 trillion. This means the capital market contributed approximately 47% of the GDP. As you know, the capital markets mobilize savings and is therefore a source of medium to long-term finance for financing key government priorities and new business expanding existing businesses. They also provide various vehicles for wealth creation for institutional and retail investors and for domestic and foreign investment flows. They enable merit-based allocation of resources and wealth distribution. They also foster transparency, accountability, good corporate governance, and they promote innovation, entrepreneurship, and job creation. In the same vein, the NSC has introduced products that have the potential to inclusively create wealth and transform the lives of all wananchi. The Amakiba bond is traded on the NSC and allows the Kenyan retail investors to lend to the National Treasury, starting with costs as low as 3,000 shillings. The Real Estate Investment Trust REITs is another. REITs makes it possible for investors to pool their funds, invest in a trust with the intention of earning profits or income from real estate. These efforts by the exchange have not gone unnoticed, and in 2016, the African Investment Holding Platform recognized NSC as the most innovative exchange in Africa. In early 2018, the NSC was admitted to the World Federation of Exchanges, WFE, as a full member. The WFE is a global organization of exchanges and clearing houses around the world that seeks to ensure regulatory outcomes that foster well-functioning capital markets and reinforce systemic stability and in addition to developing markets. Ladies and gentlemen, as mentioned earlier, companies ring the opening bell to signify the announcement of a new product. Today, it gives me great joy to celebrate the introduction of a new asset class in the Kenya capital markets, the NSE Next Derivatives Market. I take this opportunity to salute the stakeholders who believed in the NSE's ability to deliver the new market and have supported the exchange in its various endeavors. And at this point, I'd like to recognize Andy Joroge, our past chairman, who started us on this journey. In fact, I was the first chair of the derivatives committee with Terry, so I do understand a little about the short and long. Specifically, I would like also to recognize the unyielding guidance of the Capital Markets Authority and the Central Bank of Kenya and the diligence of the project task forces within the NSE, the Capital Markets Authority, and the brokerage community. The next derivatives market is finally here in Kenya and will broaden and improve the sophistication of our financial markets. According to the WFE 2018 derivatives report, the performance of the equity derivatives volume globally exceeded 13.6 billion contracts in 2018, while volumes were up 33% in 2017 due to increases across single stock and stock index options and futures. If these global performances in the derivatives industry are anything to go by, we can remain hopeful that the NSE Next Derivatives will stimulate a deep, broad, and liquid market in the Nairobi and in the East African region. The Kenyan Vision 2030 proposes the development of Nairobi as an international financial center for stable, efficient, and globally competitive financial services sector that encourages both domestic and foreign investments, generates greater savings and investment opportunities, and contributes to the overall economic growth of the country. I therefore encourage each and every one of you present here today to participate in this new venture as we continue our journey of providing the desired depth, breadth, and liquidity of our markets. Thank you very much.
Thank you very much, Sam. I think at this point, I'd also like to declare that I also fall under the short category. So, Terry and Sam, you're not alone. I would also like to ask to recognize the presence of Mr. Edward Odundo, former director of NSC and the former CEO of RBA, who's also in-house today. Thank you. Terry also tells me that no one is allowed to leave the gates today if they've not tweeted NSE futures, NSE derivatives, and next. So please let's get started on tweeting. It is now my singular pleasure to invite on stage Mr. Paul Mutaura, the Chief Executive of CMA, to share a few remarks. Thank you.
Good morning, everybody. You'll be very pleased to see I did not carry a speech. I didn't want to be responsible for the letter Jeff will write about asking for delayed market opening today. I think there are inherent risks in having 7 people give speeches about a market that has traded for a week. But this really tells us just how many people and how much energy was vested in trying to make this journey become a reality. As has been said, this has been a long journey, but it has been about making sure that the infrastructure, the systems, the rules that we're putting in place in Kenya will not only be fit for Kenya today and these fast contracts, but will really be able to position Kenya as a true international financial center and be able to scale up with the kind of vision we have for the nation, to fund the Vision 2030, to deliver the Big Four agenda, and really to ensure that Kenya takes its true position as a global financial markets leader. You know, as the authority, I must really commend the very, very strenuous work that was done by the technical teams to make this a reality. I think a lot has been said about arriving here today, but this really comes on the back of a great deal of energy, great deal of commitment that was put in, and also a lot of the work that went into coordinating. I think derivatives got a very bad name in the international financial crisis. And as we begin this journey, it's been really about making sure that there's a common understanding of what we're introducing into Kenya and what its value proposition is going to be. The products we're looking at are extremely vanilla and are really focused on opening up liquidity, generating increased opportunities for market participation, and really raising the overall positioning of Kenya as a place where business can be done, but more importantly, risks can be effectively managed. We'll continue to work very closely with the exchange, with the central bank, and critically, the industry players who are really at the forefront on building this market and continue to make sure that the contracts we'll be introducing are responsive to market need. A lot of work has gone into the design of the current contracts, but we are extremely conscious that this is just the beginning. We need to continue to engage and to make sure that there's a clear understanding of market needs and therefore appropriate design of market products to continuously support the deepening and growth of our market. So with that, is just to really join all of you in congratulating the Nairobi Securities Exchange, their board and management for this truly milestone event. Thank you very much. In the case of upward delegation, I have I really do have the honor of welcoming the Chairman of the Capital Markets Authority, Mr. James Degwa, to give a few remarks. Thank you.
Slightly. So the Chairman CEO of CDSC, senior executives from capital market issuers, intermediaries, participants, partners, investors, and so on. Distinguished invited guests from abroad and from Kenya, my fellow board members of the Capital Markets Authority, representatives from the media. I have 1 minute, I don't know whether I can make these remarks and also invite the chief guest. So, but I understand it's a virtual experience. So I think we put Kenya on pause for a moment. So I must begin by thanking all of you for gracing this ceremony that marks the launch of the exchange-traded derivatives market and for being witnesses today of, as our CEO says, a very important milestone and achievement in Kenya's capital markets industry and the financial sector in general. Ladies and gentlemen, as you're all aware, the Capital Markets Authority, in partnership with industry stakeholders, developed a strategic blueprint, the 10-year Capital Markets Master Plan. And this master plan charts a comprehensive roadmap in 2014 to 2020. The master plan seeks to provide participants with strategic clarity as to the vision and objectives of Kenya's capital markets. It is also intended to ensure that the capital markets are well positioned, first, to play their part in supporting the nation's growth needs and aspirations as envisaged in Vision 2030. And secondly, in meeting relevant challenges such as a growing domestic marketplace that is rapidly changing in the range and sophistication of products and services demanded, regionalization, and increasing globalization. Guests, one of the key initiatives envisaged in the master plan, which is aimed at deepening the domestic markets, was the introduction of derivative markets, both financial and commodity. A financial market for such products as equity-based, foreign exchange, and interest rate derivatives will aid risk management for the wider economy and improve portfolio returns for institutional investors. In addition, Kenya can develop agricultural and mineral derivative products, but first we need to improve and enhance the spot markets for agricultural products, which will then enhance prices for farmers and improve food security. Ladies and gentlemen, the international derivatives market is very dynamic and has quickly developed into one of the most significant segments of the financial markets. However, there has been a gradual transformation of its structure observed in recent years. While over-the-counter derivatives trading continues to dominate the market, OTC derivative contracts pose systemic risk if they continue to be decentralized. To address this and enhance transparency, reforms have been advocated through the introduction of trade reporting and central counterparty clearing for OTC derivatives. On the other hand, exchange-traded derivatives have become increasingly popular because of the advantages they have over the OTC derivatives, such as standardization, liquidity, and the elimination of default counterparty risk through central counterparty clearing. However, the reality is the different characteristics of the two markets mean that they complement each other in providing a trading platform to suit various business needs. On the one hand, exchange-traded derivative markets have more transparency and hence better price discovery than OTC markets, while the flexibility of OTC markets means they suit better trades that do not have a high order flow and can address contracts with special requirements. In this context, OTC markets perform the role of an incubator for the new financial products, while exchange-traded markets influence competitiveness and pricing of the overall derivatives markets. Ladies and gentlemen, on the 29th of May 2019, following successful completion of the derivatives market pilot testing phase, the Capital Markets Authority granted final approval to the Nairobi Securities Exchange for the launch of a derivatives exchange. The approved participants in the derivatives market ecosystem include the clearing house, as well as two clearing members, as we've heard, Stanbic Bank and Co-op Bank. The clearing house is responsible for settling trading accounts, clearing trades, collecting and maintaining margin monies, regulating delivery, and reporting trading data. Clearing members have the delegated responsibility for clearing and settlement of trades from their trading members. In addition, the exchange has onboarded, I am told, a total of 12 trading members. I think we heard it's 7 plus 4, who are approved to execute derivative contracts for their proprietary books as well as on behalf of their clients, who can either be institutional or retail, foreign or local. The roles, responsibilities, and accountabilities for trading members are well specified under the derivatives broker license as provided for in the Capital Markets Derivative Markets Regulations 2015. Now, today's historic milestone is the result of dedicated hard work on the part of teams from both the NSE and the Capital Markets Authority. They have worked in close collaboration with peer regulators, including the Central Bank of Kenya, the Retirement Benefits Authority, and the Insurance Regulatory Authority, as well as with market participants. I must also note that this initiative would not have been possible and successful without the continued and dedicated support of the National Treasury, and I think we've heard also the Parliamentary Committee on Finance. We are most grateful to everyone who has brought us to this exciting point of deploying a new asset class in the industry to our investors and on delivering on one of the key aspirations, the Capital Markets Master Plan. So as similarly, we have ticked a KPI as we go to meet National Treasury in our performance contracting. That said, of course, the hard work lies ahead in continuous innovation to respond to market needs, onboarding targeted investors, and ensuring that they optimally accrue benefits that come with exchange-traded derivatives. If used properly, these instruments will help economic agents to improve their management of market risks and credit risks. They will also foster financial innovation and development while strengthening the market resilience to shocks. CAS, allow me to reiterate, especially to the market intermediaries and other participants present here today, that the Capital Markets Authority is committed to facilitating innovation and continuous learning. Our industry's products and services will have a much greater chance of success, market-driven, and we remain open to engage with the various parties here to explore the horizons for opportunities and initiatives that will grow our market. This launch provides us with an opportunity to showcase the potential that our capital markets, working collectively, can harness. Ladies and gentlemen, as I conclude, it would be prudent to observe that the launch of a derivatives market in Kenya will in no doubt add to the depth, diversity of the financial services industry as a whole, as well as the national economy. The main challenge for policymakers will be to ensure that the derivatives transactions remain properly traded and prudently supervised. This entails being both proactive in designing regulations that can prevent the unmeasured risk-taking of market participants, while at the same time facilitating financial innovation. On behalf of the Capital Markets Authority, I congratulate Nairobi Securities Exchange for the launch of the first derivatives market next in Kenya and in East Africa. I wish you every success. Thank you. And I think to now delegate further upwards, it's now my honor and pleasure to invite the Chief Administrative Secretary, National Treasury and Planning to make his keynote address and officially launch the derivatives market. Thank you.
I think the long story continues. And because when I look at the program at exactly 9:50, guests are supposed to be leaving at their own pleasure. So I don't want to be here by 9:50. And unfortunately, I have a very long speech. So I'll go straight to the point. So the chairman board of the members, Nairobi Securities Exchange, the chairman board members, Capital Markets Authority, the deputy, she is left, chief executive of capital market intermediaries and approved institutions, representatives of other African exchange present, distinguished guests, ladies and gentlemen, good morning. It gives me great pleasure to join this capital market fraternity to officiate the launch of the Nairobi Securities Exchange and NSE derivatives market next. I'm honored to ring the opening bell this morning, which marks the beginning of trading in the cash and derivative market. As you're aware, the capital market continues to play a critical role in the economy pillar of our Vision 2030, which identifies financial services as a priority sector with the key objectives of increasing access, improving efficiency, and enhancing stability. Kenya Long-Term Development Agenda, spelled out in the Vision 2030, targets an annual rate of 10% growth in the medium term with an investment rate of 30%, of which a significant portion will be financed through mobilizing domestic savings. The MTP3 sector plan for the financial services aims to developing a vibrant and global competitive financial sector, driving high level of savings to finance Kenya investment needs under the Big Four development agenda. One of the flagship programs in this area is the deepening of the capital markets, with a key program being established for an exchange-traded derivative market. The initiative being implemented within the Capital Markets Master Plan seeks to position Kenya as the head of Africa capital markets. A key component in this regard is a sophisticated of securities trading arrangements, as well as the development of innovative products and services, including the introduction of derivative markets. Ladies and gentlemen, capital markets are an integral part of the economy. As an integral part of the economy, they are a key driver of economic growth and an essential part of a country's development agenda. Capital markets enable countries connect opportunities to capital through creating a bridge between suppliers of capital and users of a result. As a result, promote savings and investment, as well as facilitate efficient allocation of financial resources. I am glad to note that over the past few years, our capital markets has grown in leap and bounds, offering one of Africa's best market infrastructure anchored on cutting-edge technology as a wide array of investment products to cater for long-term as well as short-term investment needs. The introduction of the Real Estate Investment Trust, REITs exchange trade funds, Akiba and Green Bond in recent years, and with ongoing work on security lending and borrowing, have created a solid foundation that will enable the capital market to efficiently support the government transformative initiatives aimed at accelerating development and make Kenya a preferred investment destination. The launch of the derivative market today is yet another key milestone, and it signals that Kenya financial markets have reached the level of sophistication from which it can move to the next stage. Exchange-traded financial derivatives products will support financial markets deepening by providing wider risk management for the whole economy and improve portfolio returns for institutional investors. Distinguished guests, I am happy to note that the Nairobi Stock Exchange has placed special focus on growing small and medium enterprises, SMEs, which are key enablers of economic growth. Through the Nairobi Stock Exchange Ibuka program and the Growth Enterprise Market segment, SMEs have direct contact and capital market accessing various premium services that would prepare them to list or access other financing options offered in the market. Though innovations such as Akiba Bond, the government in partnership with the Nairobi Stock Exchange and other capital market stakeholders have deepened and enhanced financial inclusion through leverage on increased mobile phone penetration to boost access to the capital markets. Since the launch in 2017, the bond has registered over 500,000 new retail investors and paid over Kenya shilling 67 million in interest to Kenyans. However, despite the noted achievements, the capital market has continued to face challenges which, as you know, are not unique in Kenya, but common to frontier markets: limited listing and a narrow domestic investor base, among others, which continue to limit the ability of the Kenyan capital markets to operate at its optimal. In this regard, I challenge all capital market participants and other relevant stakeholders to work closely with the government to develop long-term solutions to these challenges. As a government, we are keen on spearheading initiatives that will position Kenya capital markets as a market of choice for domestic, regional, and international investors and issuers. During my recent budget submissions, the National Treasury made crucial recommendations that will facilitate short-term growth and create a solid foundation for long-term sustainable development of the Kenya capital markets. Some of the key submissions included: 1, introduction of amnesty on penalties and interest on any outstanding tax for 2 years prior to listing of small and medium-time enterprises on the Nairobi Stock Exchange Growth and Enterprise segment. 2, proposed to repeal Section 33B of the Banking Amendment Act 2016 to assist in unlocking credit to private sector as well as to improve trading activities for bank counters. And 3, proposed to amend the Tax Procedures Act to introduce waivers exemptions from the PIN requirement in certain circumstances when opening bank accounts. This will make the market more attractive to foreign investors. Ladies and gentlemen, today launching of the trading of derivative product at the Nairobi Stock Exchange is timely as it comes on the back of growing demand for diversified products offering and sophisticated risk management tools for investors in light of increasing asset pricing violation in both local and international financial markets. The NSE Next Derivative Market will play a fundamental role in boosting the liquidity of underlying assets on the Nairobi Stock Exchange as well as enhance the price discovery process of listed stocks. Additionally, the futures contract will improve investors' portfolio performance through enhancing efficient capital deployment. Nevertheless, for this initiative to impactfully, there is need to be a well-defined plan to ensure product uptake, including the the onboarding and engagement of various categories of users, as well as continued capacity building. Customer experience achieved through innovation derivative products that respond to clients' needs will be key to spur the growth of this market segment. This should be actualized through undertaking continuous market demand assessments in consultation with stakeholders in order to develop an appropriate trading, hedging, and risk management derivatives contract. Ladies and gentlemen, the Nairobi Stock Exchange Derivative Exchange Next is the first derivative market in East Africa and the second derivative exchange in Africa. This development will position Kenya and its capital markets as a key investment gateway for East and Central Africa, as well as enhance Nairobi status as a regional financial hub. I would therefore like to take this opportunity on behalf of my ministry and the government to applaud the Nairobi Securities Exchange and for successfully delivering this initiative. I also wish to thank the Capital Markets Authority and the Central Bank of Kenya for supporting achievements of this objective. In addition, I would like to thank the development partners, especially the World Bank, which enabled the contracting of a resident derivative consultant through the Financial Sector Support Project, FSSP, to assist the authority and the market in addressing key challenges, including capacity building of both public and private sector stakeholders ahead of today's official market launch. In conclusion, I wish to affirm the National Treasury's commitment to support market development and will continue to work with the CMA to facilitate the exchange to put in place measures to enhance product and service uptake in line with the government policy of encouraging wealth creation in the country. Noting the theme of this launch, I have no doubt that indeed the future is next. Thank you very much, and God bless you. And before I leave this podium, I also want to bring the apologies and the greetings of our Cabinet Secretary, Henry Rotich, who is away on official duties. So please join me once again in applauding the Nairobi Securities Exchange on the launch of the exchange-traded derivative market in Kenya. Thank you very much, and God bless you all. It's 9:50.
My name is Terry Adambesa. I'm the Chief Officer in charge of the derivatives market here at the exchange, and I've been fortunate to lead the team that has worked quite hard in developing this market. We think the amount of time it has taken to develop it has made it fit for purpose for the Kenyan market.
The NSE is launching the futures market, which is called Next.
A futures contract is a standardized contractual agreement whereby the buyer of the futures contract agrees to purchase a particular asset from the seller of the futures contract at an agreed upon price and time in the future.
An asset manager like Stanley will benefit greatly from trading futures on the Next in several ways. One, futures help a lot in increasing price discovery. Futures also reduce trading costs. They also greatly help us to manage our risk better in risk management and in hedging. So overall, we should see increased returns for our clients.
Kenya has been waiting for a product like futures for a long time. Kenya has one of the more developed financial landscapes in Africa and across frontier markets in general. And as Kenya becomes more linked to global financial conditions, as well as movements in global markets, investors, both local and foreign, will require a product that gives them the ability to hedge their positions in the spot market, as well as speculate on both price rises and price declines.
A
futures contract has much lower transaction cost. So you'll be able to sell that contract and buy it even within 1% variation, sort of price variation, which then means that the market is broadening and deepening. We're adding more investor classes, we are having more participants, and ultimately, as that sort of gets a life of its own, then it attracts other investors, which then improves underlying price discovery and liquidity. I think a very vibrant and liquid and deep market obviously ends up to better price discovery, eventually lower costs for all transactions, and better outcomes for the exchange and the country.
For anyone interested in trading futures on Next, first step is to open an account with an approved trading member for Next. The names of those members are available on the Nairobi Securities Exchange website. Thereafter, any trader will need to fill out a risk disclosure form because there are risks associated with trading any margin product such as futures, and this is just to ensure that they are aware of what.
That was the live launch of the NSE derivatives market. We had hoped that the actual bell ringing would coincide with when the market opens at 9:30, but it looks like a lot of protocol was observed. But what was our takeout from this? George, what was happening? Was there any new information that came out from the derivatives launch today?
I think the key things for the product is the fact that we are trading plain vanilla products. It's single stock futures and index futures. And also they are closed. It's a closed short. You also have closed shorts.
Exactly.
So it's more plain vanilla products for now. And I look forward definitely to
see what else
to
they
see
can
more
do.
complex products. And I look forward to a session where we're now trading things like naked shorts. Margin. You can do margin financing on some of these.
It feels like it's a good step in line with the strategic direction of the NSE and the CMA. We have single stock and index futures. There are 5 stocks there. So Safaricom, Equity, KCB, EABL, and BAT that are there. But then the CEO did allude to the fact that now the regulation on asset-backed securities, GDRs and GDNs, is already on the table, and they want to they want to replicate what's happening in global markets and introduce these products. So it feels like this is the first stage, vanilla product. We are also cognizant of what happened in 2008, global financial crisis. Let's test the waters and see. We have the regulation, can we execute, and is there uptake? But then, really, from the conversations we're having, do you think there'll be local uptake? Will it be foreign uptake?
No, I think the market, whether there's an uptake, the market needs to launch products. We need more products for a long time. Look at, for instance, the spot market, the spot equity market. We are only trading 5 stocks that are actively traded.
That's true.
So I think that we need to have more diversification. And I think as these products keep learning and keep being rolled out, but probably the uptake will actually will gradually pick up. Especially for, I think, I expect a pickup of these derivative products. For now, I don't expect institutional pickup.
No.
And I largely expect them to target more on the retail side and the high net worth side. People who understand that, have that risk sophistication.
And possibly
because this is a very sophisticated product.
That's true.
It looks plain vanilla for now, but there's some element of sophistication. I don't see trustees approving.
That's what I was about to come to.
Purchase of this product.
I think
so
your
if
retail and foreign,
yeah.
it's mostly, I think there's going to be foreign, because foreign participation is about 70% on the spot market. So that way, but then local markets, the pension funds, by the time we go through the trustees, they need to be able to change the IPSs, the investment programs and their schedules in terms of what they're allowed to invest in. That could take maybe another year or two.
But certainly something needs to be done. Obviously, trustees have to be oriented on these products. But for now, in the short term, I don't see them buying such products. But I expect on the institutional side, I expect discretionary funds,
maybe, or hedge funds, people who are not tapping into pension money.
A more sophisticated funding products, more sophisticated high net worth individuals to pick up these. Even a lot of curious retail investors like me, less sophisticated like me.
Is it? You have a million to spare and just to go and understand.
But certainly this is a start in the right direction in terms of product diversification.
But we need it to succeed, because we have a couple of products on the NSE. There's the ETF and there's the rate. The I rate that we have on the NSE, and we sort of go through. I find that there's the element of NSE executing on its mandate in terms of developing products that are all supposed to enhance liquidity on the market, but then the market is on another level. So there's always the issue of, is the NSC delivering products that the market wants? So for instance, when you talk about derivatives, it's exciting, but when we go around and speaking to people, and you and I have been having this conversation, it feels like maybe a commodities derivative would have been slightly more exciting with regards to demand as opposed to the single stock. So I don't know what sense you get of that. I
think that you're certainly right, and my view was that the next level of derivatives I need to see is, can I see commodities derivatives products? Can I see currency futures, you know, some derivative products that whose underlying asset class is currency.
Yes.
That would be very nice, because now when you talk about risk hedging, risk management, now that means that can a company come to the market, a company with dollar obligations, and hedge on some of their currency risk in the market? Now that when you talk about institutional uptake, then that is right there. Actually, and you talk about even, for instance, even grain millers.
Yes.
Talk about grain millers.
But maybe this sets the platform,
yeah,
the operational platform where you test it in sort of an enclosed and a controlled environment.
Yeah.
Then potentially then you end up having, at least that's what Terry Dembesa told us earlier this week in an interview, that the focus was to be able to have this as a platform, test it and see if the market adopts it, and thereafter then load additional products such as commodities.
Yeah.
But then if I also circle back on demand, I think the conversation that we've seen today is there are 7 trading members, and it looks like they're all going to start on their own proprietary books as opposed to essentially going out to clients. So you could potentially have another element of a closed market where the 7 members and potentially an additional 4 start off by trading on their own book. I think that's a good thing for them, but then it's also a disadvantage because you're not necessarily opening the market to the rest of the retail and institutional investors.
The concept of the proprietary trading that they're talking about now, I think my view is just to give the product some traction. But I think essentially it's open to everyone. I mean, I could go in there to a trading member, which I'm likely to do in the next couple of days, and set up a trading account.
Very interesting, because you actually have to, they did say that you cannot use your CDSC account. So I already have a CDSC account, I trade shares, but then they have said that you actually have to go to some of these trading members. The list of 7 is up on the NSC website, and you have to go and open an account, and I think the KYC is slightly more detailed than opening a plain spot market or equity trading account. And then you have to pre-fund your account anytime before you trade.
Yeah, but just remember that this is a margin product.
Exactly.
I mean, you're not really holding the underlying asset class.
That's
why you don't need to, there's little interaction from the Central Dispository and Settlement Corporation.
Oh, but then that one of margin, it was a very interesting teaching for me. So for a contract that has a value of 250,000, I only need to put up a margin of 10%.
Yeah.
So I need 25,000.
Yes.
But then I get the upside and the total upside to an extent.
Even the downside.
And the downside as well. The downside as well. But the promotion of this product from the people who've launched it, that is NSC and the members, they're saying, you know what, you can hedge in times of volatility. So if you don't know the market, whether it's going up and down, especially before the finance bill happened, that would have been a brilliant opportunity. When nobody knows whether the rate cap conversation is going to be there, what's happening with the banks. But then I also like the element of enhancing returns, but you have to be smart and know what you're doing.
I think this product is probably fundamentally it's tailored for 2 groups of people: the day traders like me and you, and then the institutional market that needs to actually implement some risk as a risk management tool. So I'm thinking about, just talking about hedging currency risk, hedging commodity price risk. You can also hedge interest rate risk. Think about companies that borrow in dollars.
That's true.
And as the LIBOR moves, as the dollar index moves, so is their funding costs. And talk about, for instance, airlines that borrow in dollars, and every day they have to grapple with the volatility in the global interest rate environment. This is a perfect product to hedge the interest rate, the finance cost. I think the marketing of this and the positioning of derivatives at the Nairobi Securities Exchange should actually be more institutional than even the day trading aspect of it.
But there's also the element.
And that's why I'm saying that the
George, it can't just be institutional, because it depends. Remember, we still had this conversation here where Terry said that some markets in Asia, there are a lot of the trading in this particular market in derivatives is largely retail. So you could have it both ways, because think about it. Today, 70% of your market is foreign, which means your institutional market will take some time before it actually starts to buy, and that's largely pension money, which is sticky money. So there is an opportunity on the retail market if you understand and you can get access. And recall that we've had also a conversation with one of the local non-traditional brokers, Nairobi Securities, where they say there are about 6,000 accounts of people in Nairobi alone who want to be able to trade FX, trade futures and contracts in global markets. I think that's another market opportunity that can be harnessed to tap into these derivatives. So it could be retail and foreign rather than foreign and local institutions, I think.
And I think that this is a product that could actually even, I mean, look at, for instance, betting craze in this town.
Yes.
Yeah, right? I mean, this is another avenue for people to deploy excess cash that they have.
Subject to KYC.
Subject to KYC, but I also see this as, I mean, for me, the way I look at it is the hedging bit of it. Has a strong value proposition.
I agree.
To institutions, even individual, even portfolio managers can go both ways. I can go long on, I can short a stock, but at the same time, I'm holding the underlying stock. Such that
exactly.
If the stock moves either ways, I'm profiting. So you can even hedge your portfolio or using derivatives.
I think that's the best part.
Yeah.
Just getting the local trustees to give the green light. That's the hardest part.
Hedge your portfolio using derivatives.
So what are you hedging? What are you shorting? What are you going long on today?
Well, I need to reshuffle my portfolio.
Okay.
And then see what I can hedge.
But I
think more likely take. As I said before, on that day we were having Terry here. I mean, I'm going to go long on Safaricom, and probably hedge some of the banks.
I'm going
to be shorting some of the banks.
I agree with you.
I'm always going to be shorting banks. Short the banks.
I am that one for once we're in agreement. So I'm shorting the banks. And I'm going long on Safaricom.
Yeah.
And then probably the other trigger point for me, if I'm going to this stock, into this derivatives market, would really be the reading of the finance bill, and depending on the the mood that we get and the sense that we get, because I think there could be some adjustments on the rate cap, and that would be positive for the banks. But if nothing happens, then I remain with my short position.
Yeah, I think I'm going to short the banks. I don't think something material will happen, even if they say the members of parliament agree and say, let's do a 200 basis point adjustment on the cap.
Short the banks,
you still
go
short
long
the bank. That's not enough headroom for banks to deliver ROEs in excess of 30% they used to deliver.
Oh no, that's a total. That's like it's like
it's gone. It's all gone.
It's
all gone. Banks need to find a new growth story that will deliver returns of 30%, the way they used to be.
Our time is up, George, but it was an exciting day just seeing the launch and also seeing the buy-in from the different stakeholders. You had the government of Kenya, CS, represented there by somebody from his office. You had CMA there, that's the Capital Markets Authority, NSC there. A lot of buy-in. It's been a long journey getting here. We're very excited, certainly well done to the NSC and the team. Derivatives have gone live today, have been on a pre-launch for the last 1 week. No hitches, we've actually seen trades on it. The stocks that you need to look out for: Safaricom, Equity, KCB, BAT, EABL. What are you going to do? We are shorting the banks, going long on Safaricom. Look out for the market highlights and see you later on in the afternoon at 2:30.